All right, folks. Now, my next guest says sector returns in the first half. I mean, if you study this market, it seems kind of off, right? Something is weird about this. So let's bring in Zacks Investment Manager, Chief Market Strategist, Brian Mulberry. And Brian, you know, I read where you say that before we get to the key of this market, you know, if you would told someone at the beginning of the year, Microsoft would be down, Meta would be down, Tesla would be down, the others would be up a little bit, but not a lot, and yet the S&P would be up this much, no one would have believed you.
No, absolutely not. You're getting some tremendous push from some of the other sectors in the market. Technology as a sector up 33% at the midpoint of the year. Now, it's pulled back a little bit in the last week, but also you could make the other point where if you saw technology up 30%, you might expect the S&P to be up more than just 9.
Right, right. It's these other names that, you know, listen, we kind of given up years ago on SanDisk, at least as far as being make a good chip, you know, maybe you know, if you're CVS, you need to pick up a couple of chips or something, but now these are major significant players.
Yeah.
I guess the question is, and one of the reasons the market's under pressure today is how sustainable is all of that? And if it were to go away, would it actually be because these names are spending less, and would that benefit those names?
Well, really, it's kind of pulling into all of the CapEx spending that you guys were just talking about, and where the most durability is in the components that solve bottlenecks. Memory is a huge bottleneck right now because it's all about transferring data from the processor to the end user, and that makes all of these memory names incredibly important. So when you look at the durability of that CapEx spend, it has to go there because you have to have memory, and that makes these names like Micron and SanDisk very attractive every time they pull back.
So then we're going to talk about that because you say the key to staying investing when the market starts to swing, whether it's momentum swinging, sentiment swinging, is to pay attention to profitability. This is a Korean research firm. Next year, DRAM prices are going to double 100% from here, and yet these stocks are pulling back. I guess conversely, we'll pull up a table here where Morgan Stanley says that the growth rates are going to slow. And then finally, you've got some folks that says, forget about all of that. We're going to, the shortage won't last. But this is in 2028. Should these stocks be reacting to something that may negatively happen 2 years from now?
No, I don't think so. And the durability of the trade is good for 12 to 18 months. At that point, the bottleneck will be solved. There's no question about that. And then we'll move on to whatever happens in the tech stack after that.
So the bottom line right now, these prices are down. SanDisk, Micron, Western Digital, in your mind, they're buys right now.
Yeah, absolutely. There's no question about it. The total revenue generated by these firms was going to be about $600 billion next year, and the year after that, it's going to double again. So this is really an opportunity to buy into something that's still growing, and the demand is very strong.
What's interesting is Morgan Stanley had even a different take in saying, hey, the rate of growth is going to slow. Obviously, you can't double every year, right? But that maybe we'll get to a different level, right? There won't be the old cyclical business that it was. And what happens then? Let's just say 2 years from now, it gets here and it peaks, but it stays in that level. That's not bad for these stocks where they're trading now.
Absolutely not. We're simply saying take advantage of where the value is today, and that's in the margin growth as well. You're talking about Micron at 84% margins. They're incredibly profitable for now. They won't be forever, to your point. Know what you own, know why you own it, and then when that changes, move on to something next.
You like power generators as well. GE Vernova, Caterpillar. We're going to pull up a chart. I want to see GEV for a second because I just got out of it. I just had my subscribers take profits. I owned a position from 4 or 5 years ago when they had the new CEO. I'm never going to really sell that, I don't think. But I've just been worried about the way it's acting here. But the chart is beautiful. Where do you think it goes?
You know, I still think it goes up higher because they're sold out for the next 5 years in terms of the gas turbine business that they are so good at. And I think demand is only increasing. That's about where you would see small modular nuclear reactors come online 5 years from now. So again, the durability of that trade lasts for the next 3 to 5 years. They are absolutely in demand as you're going to have these data centers be independently powered from the public grid.
Caterpillar took off last year, became an AI trade. A lot of folks didn't believe it. They believe it now. Again, just an amazing looking chart. Opportunity on this pullback.
What a lot of people don't really know about Caterpillar is that they have a gas turbine business as well. They're filling in the stopgap because GE Vernova is sold out. Caterpillar is now adding gas turbines to their business. So not only the big construction equipment that are clearing the land for data centers, they're powering them as well. Again, very durable, strong margins.
Photonics, one of my favorite sectors, Corning, Marvell, Intel. This Intel to me, it's Corning too. Corning, again, 50-year-old company. They continue to reinvent themselves. They're going to do extraordinarily well for years to come, I think, with this optics play. But Intel, before I let you go, this has been a remarkable story. They're on the cusp of maybe going out of business. The U.S. government invested in them. They're up about 600% since then, and you still see more upside.
I do, because they are the next wave. So we're talking about all that memory and what might happen in 2 years' time. Photonics is the next level of how data gets transferred from GPUs to the end user. So this is the next level investing. When you're looking at where profitability comes from, this is what's going to happen in terms of fiber optics and photonics transferring the data even from data centers in space.
Yeah, great stuff. Good stuff. Brian, thank you very much. Appreciate it.